some familiar faces and some new ones this morning. Silver, big government and bailouts was what I was originally going to talk to you about, but as I'm sure you're all aware, things have been rather fast moving recently. So I've slightly adapted my presentation to sort of bear that in mind. And also I had to think about it, and it occurred to me that the Silver Summit is a little bit different than most investment summits or presentations that people like me tend to make. Mainly because most of you are extremely knowledgeable about the subject already. So I felt a little bit exposed going into too much detail, and certainly people like David Morgan, who will be talking later, probably better qualified to go into the minutiae of the silver market in terms of supply and demand and those kinds of areas. So what I thought I'd do is just give you my perspective as an investment manager as to why I like silver, why I think it is a relevant investment at the moment. And also maybe bring up a few items on the macroeconomic agenda which are obviously important at the moment. Firstly, I thought I would refer to a quote from somebody from the last American administration, I'm sure you're all well aware of, Mr. Rumsfeld, because I thought it was rather appropriate for somebody who's supposed to be responsible for investing other people's money, which is what I do. The quote about known unknowns I thought was a good one, so I'm going to remind you of that. There are known knowns. These are things that we know that we know. There are known unknowns. That's to say, there are things we know we don't know. But there are also unknown unknowns. There are things we don't know we don't know. And I think probably that just about sums up the investment markets at the moment, which are pretty grim. Having said that, I think there are a few things that probably those of us on the gold and silver side of the equation do know and are probably known knowns. One of them being the death of fiat currencies as we know them at some point in the future is going to happen. I can't tell you when that will happen and in what way, but I think it's certainly something that's relevant at this point and something that we need to be thinking about more and more, particularly as the new Bretton Woods structure is discussed at the end of this month. Effectively, there are two ways this may come about. Perhaps a US government default on its debt. That's something which I think people are considering at this point. Won't happen in the next 3 months, but certainly in maybe a 2-year time frame, I think people will have to think about that with a lot more seriousness. And of course, the hyperinflationary argument, which is something which those of us as gold and silver investors see as being perhaps a route to profits. Although those profits, of course, will be booked in fiat currencies, so we tend to go round and round in circles here. I must just give a quick disclaimer, in as much as I am a portfolio manager, so I can't tell you that all I do is invest in silver. That's not the case. And I do think it's important that people think about their investment strategy in a diversified way at the moment. I think silver will play an important role, along with gold, as a percentage of one's net worth. However, until we know the rollout on the inflationary versus deflationary argument, there is still an important role for cash, government bonds in solvent countries. Not there are that many of those, but they can be found if you look carefully. And the odd equity investment if you have the risk profile for it. Coming back to silver specifically, I suppose I was thinking to myself, what can I really add? Well, I suppose the answer is why silver at the moment? What is it about silver right now that makes sense? Clearly, we've come down from $21.50 to, I think we're around $10 this morning. Well, I think the primary thing I'm looking at as a portfolio manager is this Bretton Woods, new Bretton Woods framework, which is going to be discussed later in the month, the G20 countries. Because I think it's inevitable that, particularly when they're referring to Bretton Woods itself, that people will start to consider whether there is a role for a backing for currencies. Usually fiat systems are replaced by standards of one sort or another, and I expect that at a minimum, a discussion of whether gold, silver, or gold and silver as backing to currencies will come back on the menu. And for that reason, I anticipate people will be much more interested in silver as money as we move forwards. The fundamentals for silver, as I'm sure David and other presenters today will put to you, are very, very compelling. This is an asset which is no one else's liability. There is a supply-demand issue that needs resolving, particularly the weighting of secondary mining dominating the production side, which in a contracting global economic environment is clearly a driver for higher silver prices as we move forwards. But the thing which I'm sure most of you, if not all of you, are all aware of already, is the issue of the divergence between the spot paper price for silver and the price for physical metal. I know Nick has arranged for some physical metal to be here today, so I suggest you make the most of the lower premium and stock up. I don't know how much he's got, but certainly anything that you can buy at the moment is a sort of specialist situation, because if you turn up at a bullion dealer, it is more akin to a Soviet Union bread queue than a regular retail outlet at the moment. So take advantage of those opportunities. I think the equity market, and obviously those of us that have been invested in silver equities have seen a pretty brutal correction. I think across the board we're looking at around a 75% drop in silver equities since the crisis has emerged. I'm clearly talking my own book to a certain degree here, but I do feel the market hasn't understood the dynamics of silver as against other industrial metals, both in terms of the premium being paid by investors for physical metal, but also the fact that there is a very different dynamic with respect to the way that silver is produced as compared to copper or other industrial metals. I think that once this huge divergence, I think at the moment people are paying somewhere up to 60% over spot for physical metal. I think that once the paper market, if I'm allowed to call it that, come to understand what's really going on here, and obviously the December COMEX contract is something that we're all looking at with great interest to see whether people will be able to force delivery on their paper positions. But once that does happen, investors really are in a position where, because they can't access physical metal in any size, and I do believe that the extra counterparty risk in owning an ETF is something which will come on the menu in the next 12 months, that they will be effectively compelled to reappraise silver equities as a way of accessing silver in reasonable size. Because as I say, you might be able to buy a few coins, but over and above that, if you want to buy something which is free of counterparty risk, then a silver equity is going to make the most sense going forwards. So rather than sort of concentrating on what has been a very brutal 6 months preceding today, I would concentrate on what's coming in the next 6 months. I think we've all probably, those of us that have been invested in silver, have been rather ahead of the game with respect to the macroeconomic picture. You shouldn't forget that. Try and remember that, you know, one was here for a reason, and that reason has become all the clearer, but the overall investment community probably haven't quite come round to it yet. And I think the paper price divergence with bullion will be the biggest driver in making that happen in due course. I've written down here that the market has ignored that silver is money, and I'm sure that there are people who would argue the toss on that and say, well, I'm not sure it is. I think it's probably 6,000 years of human history are good enough for me, if not for the regular marketplace. And again, I think that to treat silver as it has been treated in the equity market, as the same as any other metal, is really missing the point about assets which are no one else's liability and precious metals as money, which clearly is the major reason to be interested in gold and silver. We're not in it for electronic uses. The reason we're all here is because we believe precious metals are money. And I think that despite what the market may be saying to you, valuations are nowhere near representative of what is really going on in the overall marketplace. I would also just refer you to the currency markets at the moment, which are quite staggering in their volatility. You're seeing a lot in the papers about the equity market moves and the VIX index, which clearly is an equity market measure. But I would push you to just try and observe currency markets at the moment, because that will give you a better gauge of the real level of drama being played out in the global financial markets. I noticed that the Canadian dollar against sterling, which is something I look at being a sterling investor, was 206 to the pound sterling last week. I think this morning we were 183.5. It gives you an idea of the degree that currencies are whipsawing around. And I think that while it's easy to get sucked into looking at equity markets, probably bond markets as well is another area you should look at in terms of the overall pot. These are vast areas of investment money which probably are being ignored at investors' peril at the moment. I think there's a serious re-rating to come in the next 9 months. So don't be too put off by either the price of equities or the spot price of physical silver or gold priced in dollars for the time being. Please forgive me, because I'm sure a lot of you have heard these quotes before. I've got a couple of quotes for you from Federal Reserve Chairman, the current one and the previous one.